Adam. Great to have you back in face. I missed you last time. Glad I almost missed you this time. Glad to be able to speak to you and ask you a few questions here.
Yeah, thanks for joining us, Adam. I'm gonna bow out too.
All right. Well,
So how
thanks
you
for
doing,
having me.
buddy?
Good, good. I don't know if I can play the video. I got something for you here.
Oh, you have a video?
Yeah, I don't know if it's showing. Is it showing? I think it's showing there now. Yeah, well, that's not a video. It's a video of me, but I got the old representing here out. This is out where your neck of the woods, right, Dale?
Yeah, San Diego.
Yeah, there
Oh
you go.
yeah. So
Plus,
your
also
kids.
USD. I love this shirt. Perfect.
Well, your kids. Are you saving for them to be able to go there?
Well, that'd be nice. I'd visit them there.
Yeah, that.
I know a friend of mine went to San Diego State, played soccer there. That seemed like a good
Yeah,
gig.
yeah. They live near. They'll be living near La Jolla.
Yeah, I've
Pretty
been there. It's
nice.
nice. Let me tell you,
Oh yeah.
I would prefer to have air conditioning though in the summer.
Yeah. Well, they're on the coast. Okay, so
So,
that's their air conditioning. They have the ocean. I'm
yeah,
inland.
I understand you got to do pretty well to get a place on the coast in San Diego. So we're gonna keep grinding away.
Yeah.
Like I think
Yeah.
that's about the most expensive real estate in America.
Yeah, so I mean, let's talk about what's happening in your neck of the woods in Canada. Are you still long-term bear on the Canadian dollar, which means you're bullish USD CAD?
Yeah, no, it's coming apart at the seams here. I know we're up like 6 of the last 7 days or whatever, in the Canadian dollar, down in dollar CAD. And it's listen, I'm a fade on this. The real estate market here is it's really coming undone. And I had a moment there, doubt in the springtime as it got a little bit better, but it's not pretty. And I'm not particularly excited about risk assets here as well. I think Bitcoin is a bit of a tell today.
Okay.
The Russell can't seem to get going. You look at cyclicals, the Caterpillar stock, steel, any of that is struggling badly right now. Lumber. I think I'm starting to get that kind of 2008 summer vibe. A bit of a
That,
calm before the storm here.
yeah, and that's
Because,
interesting because the poster child, NVIDIA, put in a key reversal,
well, that,
and you've been
yeah.
around long enough, Adam, to know that when things are parabolic like this, you look for a key reversal.
I mean,
You
it
look
doesn't,
for a
to me,
signal.
it doesn't get any clearer than that, right? Like if
Yeah.
you're long, congratulations. And I've been long, but I got out, I guess, too early. But if I was long, I'd be out because that is exactly what that is. And a 3% up and then a 3% down the end of the day and drops again on Friday, even though it was a decent day for for risk assets. And I don't know what this is going to sustain the rally on if it's not AI anymore. And this is due, like it can go down 20% and it's not
Yeah.
that big a deal.
Well,
But
that's what it did here. That's
what's
what
going to
it
hold the
did
rest of the
here.
market up? I mean, I think you had some other leadership then or some other things that could pick up the slack. But if AI takes a break, yeah, there's someone in the chat saying there's some insider selling as well. Like I think everything is just starting to line up and it's just screaming to me like get out of the way. And it's really
Okay.
just a matter of how you want to trade now. I think the risk off. I think bonds are pretty compelling. Um, but I'm trying not to overthink this.
Yeah. So, okay. When you get that kind of vibe, it's interesting. I'm thinking some people are going to be caught offside because if we do have risk off, and I do think we have at least a correction here, maybe S&Ps get to 5,200 or so before they, down into here before they make another attempt if they are going to continue higher. So is it possible that we can have risk off without the dollar being a safe haven this time, and that
Um,
there's
I mean,
flows
yeah.
out of the dollar into emerging markets and other markets that haven't been as the best sturdy shirt. We turn into not the best sturdy shirt.
Maybe the yen. I mean, I'm not buying the euro. You guys were just talking about the politics over there. It's terrible. Um, Sterling, maybe. I mean, I'm certainly not buying CAD or commodity currencies.
Okay, you're a dollar bull.
Uh, and other emerging markets. I mean, you're talking about South Africa. I was there last time. I was just
Yeah.
there, and it's certainly not buying that, whatever they're selling. I mean, one day will be, but I don't think that day's today. So yeah,
Okay.
I mean, it's got to be the dollar for me. And even gold, like, is gold really that safe haven asset in a risk-off environment? I don't think it is. Um, so that's one to maybe think about, but I find I have a hard time. There's been a lot of positive risk correlation with the dollar.
There has. Yeah.
So and gold, and so I don't really look at that head and shoulders. I mean, that jumps off the page, right? And it looked like it was going to invalidate it on Thursday last week, and then
Exactly.
Friday just
Right.
slammed it.
Yeah.
And
Who they call that guy? Slammy Whammy or Sammy Slammy came into the precious metals. And Luke Roman has an interesting take that it happens on Fridays when the Chinese aren't in the market. Do you
well,
think there's a
there's
war?
something to that, and I think that was the tell, right? When we got that May China data and the central bank wasn't adding, think,
Yeah.
oh man, that was a sinking feeling when I saw that headline because I was long.
Yeah.
It was time to get
Yeah.
out. Um, and you know me, Dale. I don't come on here and be bearish very often. And
No,
I
you
just
don't.
think um this is like what could happen. The data could, okay, I can't even construct that good of a scene with the data. So ISM was good on Friday, or sorry, the S&P PMI was good on Friday, 26-month high. That's probably bad news. Pricing in 2 Fed cuts still, but I think they could maybe do 0 the way they're talking. And they're definitely going to be late. Whatever it is, they're going to be late. Like, a recession will come at some point and they'll be late. So
Then maybe they're already late.
yeah, exactly. So at best case, they're going to be late later.
Yeah.
Like so generals always fight the last war, right? I know you love a saying, and they're fighting the
Yeah.
inflation war when I think that's over. I mean, it might be over forever the way AI is going, and the job losses that are coming from that, which I almost feel like I'm turning into a crazy talk guy, thinking like unemployment might go to 20% on this.
Yeah,
And
because of displacement. Actually, there was a piece on 60 Minutes about quantum computing, which is the next step that is even more powerful than AI. The
I mean,
computing power of quantum, it's kind of like Oppenheimer in technology instead of just the bomb. It's
yeah, I mean,
physics. Yeah.
they've been working on that for a while. It does seem really difficult, that job, but robotics, I don't think seems so difficult anymore. If you have robots that can recognize what's going on, well, now it's just a mechanical challenge to build the robots, and programming them seems almost trivial with AI. So, I don't, how many jobs are really going to be at Amazon warehouses or in fast food? I don't think food prep is beyond what they can do. And I mean, how many people work in food prep in the United States or in the world?
All right.
That's
I know. I also know that you're an energy trader, and
Yeah.
you usually have a view on oil. And there are a lot of people that are bearish because of economic weakness and demand. But do you think that what we're getting here in the last few weeks, where, first we had this to clean out the bulls on the OPEC meeting right here,
Well,
and now we squeezed out the bears over here. Could this be setting up a big rally towards 100? Like this is one rally and this was a correction and we're going to get another move? And could it be instead of demand driven, although I hear they're going to have to use more oil to generate electricity globally? But could it also be some type of supply shock because of what's happening in the Middle East? Do you worry
well,
about that?
I am a bit worried about that. I mean, wars are hard to predict, right? It looks like Israel, and Lebanon, and then who knows
Yeah,
what's going to spiral from that. Again, I mean, it's been really tough to make money trading geopolitics. I mean, there was a fade trade at one point on when Israel and Iran were lobbing that
yeah.
volley at each other. But other than that, I don't know. The Middle East is tough, and wars are tough to predict. But you've got China is a big part of the demand equation, and China is doing okay. Now you look at
Okay.
the Chinese market, it's again, predictions about China extremely difficult, but the economy is improving there, and that is a marginal buyer of oil, and so is India. Right now you have
Yeah.
OPEC. I mean, there is 5 million barrels of spare capacity there. So, you know, you can't get above 100 for sure. And, you know, shale can certainly turn on the taps as well, though I don't think that's going to happen this year. And I think US production is going to disappoint this year. But,
Okay.
you know, I look at the US economy, I think is doing okay now. You know, that ISM number was pretty strong. United Airlines on Friday said they expect this Memorial Day weekend, not Memorial, July 4th weekend to be the strongest ever for travel demand. And so aviation is actually eating up a lot of demand. But then you look at things like hotels, like you guys mentioned, and it's, or at least Airbnbs, and it's not doing great. So, you know, if it is 90, and I'm kind of on board with that because the market got ultra short. Like if you saw positioning 2 weeks ago, ultimately was the tell when we kind of got knocked down there. I think it was the most negative ever on the CFTC data on oil. Now, some of that represents a
Yeah.
lot of interest in oil now, but it's more and more financialized oil. And so,
Good point.
you know, I think I am long right now. I'm kind of uncomfortably long, and I would like to see 90, but I don't know about it much higher than that. Again, you maybe could get that kind of squeeze because some of the things you're talking about with financials, US doing okay, but I mean, again, there's still 5 million barrels out there that OPEC can tap. So
Okay.
it's tough to
Well,
be
you
really.
did bring up bonds, and I think the last month was important. You know, we pulled back. You really, if you look at this, you know, it was a wedge, but on the monthly, this could be a right shoulder. Here's your left shoulder. Here's your head, putting in higher lows here. And then if we get over 105, you know, you're talking about, you know, maybe 110, maybe 115. Um, I mean, people are pretty conditioned not to buy treasuries. I think there was a story about in Italy where they converted, I don't know, 90-day paper into 10-year bonds.
Yeah, that's tough. I mean, it probably paid pretty well, but you know,
That's like a bail-in almost.
I like it. I like bonds right now, and I think people are going to look back and say, I mean, we're in I like the long end especially,
Yeah,
or because we're going to look back if there is 20% unemployment and think, wow, we had a chance to get not necessarily in treasuries, but if you go with the risk curve, I mean, 6% is not hard to find in some real high quality.
junk. You mean in some of the junk bonds,
No, I just think if you not
corporates?
junk, I don't think you need to go down that far.
Okay,
You know, some high
corporates.
quality corporates, that's for
Yeah,
sure. Or even prefs, which high quality preferreds. There's some upwards of 6.
yeah.
So that's not going to last. And it's just a matter of, okay, do you want to be early or do you want to be late? And I agree with what you're saying about the chart. And number two, the last few auctions have been very strong. I think we stopped through like 4 in a row now after a period of time into the end of May when the bond market couldn't seem to find a bid. And now it
Yeah,
seems real money's loading up. We've got 2s, 5s, and 7s this week, which is what I'll be watching very closely this week.
these were
And
failed auctions right here, Adam. Exactly what you're talking about. And all it did was pull back to the wedge line. So, I mean, I've been talking about this wedge for a while. We had a throw over, then we got back inside, then we held it, and then we had a breakout over 90. I went short these bonds, and there still are a lot of bond bears, aren't there? Because of
it's
our,
certainly
you
not
know, our
crowded
fiscal
trade.
position.
Well, that's it. You worry about supply, right? You worry about supply a lot. And then again, and I think there's a bit of a knee jerk to stay in tech. Like tech investors, they don't get shaken out. I feel like they've learned their lesson of that you buy the dips in tech. I think ultimately that will somehow get blown out at some future point, but it's pretty hard to bet against some of these mega cap tech stocks. And then, you know, real estate's not looking so hot. I just think a lot of roads do lead back to bonds. And again, you're getting paid pretty handsomely if you start to
Yeah,
think, wow, we are in a recession. And people keep saying, oh, the Fed's not going to go back down as low as they did. Like 3%'s the floor, right? So you think, well, I can still get 3% in twos. That seems insane to me. If there's a recession, and inflation's low, why wouldn't they keep cutting? I mean, they're not going to go like how, maybe they'll be late again, which is just going to make them cut more. Like they'll say, we don't want to fuel inflation again. Well, now you've still got rates too high, so you have a worse economy. So more and more and more layoffs, and you're just eventually going to be chasing it right down to zero probably again. And then you look back and you think, man, I could have had 6% for 20 years.
How much are real estate values down in Canada, Adam?
Well, it is pretty regional. Toronto's really cracking now. And, we're seeing it's about, it was 20% sort of the bottom, but maybe bounce 5 off that. But if you have places like Alberta, oil country, it's at all-time highs. And you have Montreal actually doing pretty well as well. So Vancouver is just an influx of foreign money, but it's coming off. But Toronto looks really cooked. And the condo market there, I don't know what they do out in San Diego, but they're like 500 square foot condos and nobody wants them anymore. And they were full of Airbnbs too.
Right.
And it's a lot of the same things you saw in the US. It was a lot of and in the single family home market, a lot of pre-sales. Right? So if you played this game the last 20 years in Canada, it was a slam dunk. You bought pre-sale before it was ever constructed, say 3 years out. You never took possession of the house and you flipped it before it closed and you made a lot of money, and you just did this over and over again. So next thing you know, you're doing it with 10 houses, and they're all now hitting the finish line, and they're all way underwater, like 20-25%, and they're terrible houses. And there is still a lot in the pipeline, especially in condos, but also in single family homes. And you drive through these neighborhoods and it's just desolate because they're not even finishing the houses now. And I think it's just going to be one after the other hitting the market here for a number of years. And, rate cuts maybe saves it to some extent because we have massive population growth in Canada. But I don't know, people just can't pay 1.2 for a cookie cutter home.
Yeah, so it sounds like the U.S. in '08. Are there any Canadian banks in trouble? Who's holding the paper? And could there be contagion?
It's a different sort of story in Canada. The number one is that I don't think the banks are actually that. I mean, they'll be on the consumer side, the lending side, the macro side, but
Yeah,
not in the same way as Canada is. I think a lot of the builders end up holding it. I think a lot of the consumers. So in America, you have non-recourse mortgages, right? So, if Dale's underwater, you bought a house, you just give the keys back to the bank and here's
right.
your house. And now you lost a bunch of money on the mortgage. In Canada, it's full recourse. So they take everything. They'll take your car, they'll take your retirement savings. And
Wow,
so the consumer just gets blasted on that. Anybody
wow.
who's holding it you can't recover, right? So say in the
Right.
American financial crisis, as ugly as it was, you could walk away from the house and you're kind of scot-free and you can start over again. Whereas Canada, like you're going into personal bankruptcy.
I got it.
And that is going to really depress the Canadian consumer, I think, for
Years.
a decade plus. That's a
Yeah.
big, big hole to climb out of. So that's
Okay.
that's going to be the main difference, and it does not bode well. I'm a
Yeah,
very
it's the most cautious I've heard you, and it's probably hard not to be when you're surrounded in an environment, the region you live in, with you know, hearing what people are saying and feeling the pain that's out there.
out there. And like
So,
I should like condition it a little bit. You have people also in Canada that bought houses 25 years ago, right, for nothing, and they're
right,
worth a lot now, and they're spending, right, and they're keeping it up. And if you bought that $50,000 house that's worth $2 million today,
yeah,
like if that goes down by 30%, like you still have a lot of money in your pocket. And I think only something like 1/3 of Canadians have mortgages because a lot of that money is built in. But I think ultimately it's just a very slow motion train wreck because you have this older cohort that has money to spend and it's not going to bother them. I think. And then there's a younger cohort that's absolutely tapped out and can't buy the houses until eventually those houses have to turn over and the whole thing comes down. So it's like a 10-20 year just underperformance. And I think it's going to be reflected in the currency because rates are going to have to come down.
okay. So, I'm probably going to be able to speak to you one more time before the presidential elections here in the U.S. We have the Super Bowl Thursday night, the debate. And someone asked me about the political uncertainty in the UK, if that was going to hurt the pound against the dollar. And my response was, I don't think there's any country on the globe that has more political uncertainty than the U.S. Do you have any kind of feeling about what's going to happen this fall here in the
Well,
U.S.?
I think I don't have it. I mean, predictions are hard to make, but I'll say the one scenario I think is probably the worst case scenario is say, so the Senate is going to be Republican. I think that's a done deal. The White House probably, if you look at betting markets, something close to 50-50. Doesn't seem that way in my mind, but I think the House is what really matters. If you have, say, Republicans get the Senate and the White House, but Democrats hold the House, it's just gridlock. And I just don't really see any scenario that doesn't end in some, and that's the worst gridlock. And I think probably the best case scenario is you get a Republican sweep. And then you can, like, the fiscal train keeps on going until eventually it stops. But that, it can go on for maybe 10 more years. You don't know. It's like Japan. But if you end up in a scenario where it's gridlock, I think there's just going to be such tension. And I think that both sides are willing to sacrifice the economy just to play games, just to blame the other side if they have the White House, right? Because everyone blames the president. And I think that kind of scenario that I outlined, where Democrats hold the House, is their best case scenario. Because they'll take the pain for like 2 years, blame everything on Trump, kill all the fiscal side, and then they'll probably take the Senate back at the midterms, expand the lead in the House in the midterms, and then they figure they'll probably tee up something for the White House in 4 years and get even more of a majority in the Senate then. So
do you really think we're going to know who the president is on election day?
Well, that, I mean, that's sort of short-term uncertainty.
Do you think we could have a mess here, Adam?
Do you ever think, I don't even know, what's that scenarios? And they talk about, like, they run 1,000 scenarios and 5 of them come out where it's a tie in the Electoral College. Like, that kind of thing just seems like, whoa. And it's not like, it's not a 5% chance. It's like a 0.5% chance, but 0.5 is pretty high. And, like, I don't see any scenario where that ends well. And then, like you say, these other scenarios with vote counting, and there's so much mistrust.
Yeah, they're not going to accept the legitimacy of the election, depending on both sides most likely.
Well, I mean, that is, again, there are constitutional crisis scenarios. I'm always of the opinion, generally, the sun comes up the next morning and businesses keep on working, and Congress has been bought off anyway. They're not going to do anything to hurt Microsoft. So, and I feel the same way about Europe. It does always seem different, but I think it'll be fine. I hope. But yeah, like, there are certainly, it's a long ways out, but it's a little, and again, that just makes me want to be more cautious as well. Like, I really think Bitcoin's sending a pretty strong signal here. Man.
Yeah, I'm looking for about 40,000 actually. But we're into, the 4th day of summer. What are the best opportunities going into the fall that you see, Adam?
I think bonds, I mean, the yen or Swissy could be interesting here, short CAD. Other than that, like, I'm kind of looking out there and I'm thinking about the last, like, the COVID cycle. And there was a lot of sort of effort. Okay, if you take quality, you go to utilities, you go to, like, these kind of safe havens, you'll be all right. But the way the market works now, it's so much options activity, and the whole thing gets flushed. So, like, straight cash or straight dollars or, bonds, you worry. I don't think it could be like COVID where bonds get blown up like they did, but you never know. And I just hate to be bearish and try to rush the trade when I think, well, maybe you just wait 6 months and let the dust settle. There's always another trade. So, that's how I'm thinking about it right now, because there are a lot of things I like in the longer term. But
yeah, I know you like copper. Is this a great buying opportunity in copper?
No, I don't think it is. I mean, it's a 2026 trade. It's always been a 2026 trade when it physically gets tight. And that's even looking better with all the data centers and everything else that's happening. And And I think it's not that big of a rush to get in. It has been a wonderful trade.
Yeah,
The copper
huge.
miners did so well. And
Yeah,
I've been talking about that for a long time, and it was nice
long
to see
time.
it today.
Yeah.
But I'm
So
out.
continue to buy weakness in the copper miners
Well,
if we
that's
get
it.
a
I think
sympathy sell off with the market.
I think that's probably a ways away. Like I'm just not in a rush here to, and I think, discretion is the better part of valor. And I think we're close to that phase now. Now, what could happen? There's positive July seasonals, so the AI trade can really cook further. Um, the macro trade can help. Inflation is coming down. But we saw it. CPI was low. Like, what is that telling you in the market? CPI comes in way lower than any estimate. And what did the
Yeah.
market do? Barely went up. Like, if you
Yeah.
can't get a rally on CPI anymore, what is there?
When
You
do we
know?
start getting employment numbers that are softening? Do you
Yeah,
think
and
that's
I'd be
around the
curious to
corner?
see how the market takes that. If the Fed put isn't there right now. I mean, I think it ultimately is because they will cut down to zero, but there's going to be some kicking and screaming on the way down. You look at a lot of those, job openings or Indeed or whatever these other surveys of jobs, they're all softening. So, once the layoffs start, you can't stop it by cutting from five, 5 3/4 down to 5.5. Like it doesn't stop till you get to like 2.5. And that's going to might take the Fed 2 years. So, you know, I'm having a hard time finding anything to be optimistic about in this market for the first time in I don't know how long.
Okay, well, my takeaway here from Adam, and it's a little, I usually don't have this kind of tone. I sense caution and patience is the best instrument to use, and brings to mind that we're paid to wait.
There's always
That
another trade. There really
there's
is.
always another trade and some caution and little risk aversion in this time. And Canada still feel that Canada's economy is in deep trouble. So compared to the dollar, it should depreciate. And long a little crude, but not the kind of enthusiasm that I normally hear from you. So we had a cautious, patient Adam Button here today, and it's important that you guys follow him here on Forex Live, and follow him on Twitter at FX_Button. So anything new at Forex Live you want to talk about?
Yeah, we're just rolling on here. Sort of dabbling in a few more, trying to wider net on the things that we're writing about a bit lately. But no, we just stay in the trenches. I mean, that's the thing about Forex Live is you know what you're getting in a world where everybody's trying to chase the new thing. Um,
Yeah,
I think there's a lot in a steady voice that's it's been doing it a little while now. So
and boots on the ground, which a lot
that's
of
it.
companies, besides, places like Reuters or MNI, they put boots on the ground. You're in that camp. Um, Adam's a gumshoe
Yeah.
journalist,
Well,
a
that's it.
closet, a
We
closet.
read listen, nobody does and I feel it more and more. And you talk to the equity guys. I saw a note the other day, it was like Goldman research. And they don't tell Goldman analysts like how many people read or download their reports from whatever
Yeah,
behind the portal you have. And they say because it would be too depressing for them to see. And that's Goldman Sachs research.
wow.
Nobody does the work, Dale. And that I think is the ultimate edge in markets, is reading everything, actually reading the speeches, doing the work.
Yeah,
Everybody just wants to chase the next thing. Social media is just toxic for your attention span.
yeah,
And, I just try to be the guy that does the work.
yeah.
And I
You
think
can't be
that's the
lazy in
dying
this
breed.
business. You cannot be lazy in this business. Everyone tries to sell you the secret to trading for 10 grand. It's hard work and living through adversity, isn't it?
Yeah, you just got reading the reports and yeah, stay. And then the mental side is we could talk about that all day, but
Yeah.
I think there is an edge in doing the work and I enjoy it. So I feel blessed.
All right. Great having a conversation with you again, Adam. like always, thank you for coming into face and edifying our community.
Go
And
USD. See, I told you I'm
yeah,
representing USD. Go dollar.
yeah, and you better start saving your money if your kids are going to go there. It's probably like 20, 30K a year,
Yeah,
maybe
so far, yeah.
40. All right, buddy. All right, so Adam Button, California Dreaming.
Yeah, that's
And
it.
that's a wrap, everyone. Follow Adam. He's
And go
one
Oilers.
of the
Go a big
best.
hockey game tonight. I know you're all hockey fans out there.
Yeah.
So
Oh,
Canada
yeah.
hasn't won the Stanley Cup in like 31 years. So tonight
Okay.
is the night. We're playing Florida, and I'm not going to be a Cad Bear tonight. I'll
Okay.
cheer on Canada
Well,
for
yeah,
them.
maybe we'll get
Eugene.
CAD will strengthen and give you a better level to sell it.
This is the
So
biggest hockey game in like decades. So we're
all
geared up for
right.
this.
All right. So it's not the Montreal Canadiens that are playing it, right? Or is it the Maple Leafs? Who
Edmonton
is it?
Oilers. Connor
Oh
McDavid,
my
Edmonton
God.
Oilers, best player in the world, playing Florida.
All right. Adam Button, everyone. Check him out. Adam's got a great perspective on everything he covers, and that's going to be a wrap for me. I'll see everyone tomorrow. Turn around Tuesday. Don't just count your grains and your coins and bitcoins. Count your blessings. If you're watching this broadcast, you're fortunate because you have money to risk. A lot of people in the world right now don't have money for necessities. So be grateful. And I'll see everyone tomorrow. Thanks again, bro. My trading
Thank
warrior
you.
brother,
Yeah.
Adam.
Good luck with that air conditioning.
All right, man. Thanks very much. All right, everyone. That's a wrap. See you tomorrow. You could join the team on the Morning Edge in 13 minutes. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.